I'm going to talk for only hopefully about 10 or 12 minutes, and you should all feel free to jump in. There's only 7 or 8 people here, so just interrupt me. I've been known to ramble for like hours if people don't interrupt me. So I hope people aren't overly polite here, because you really should interrupt me and ask questions. My goal is to talk for 10 minutes or so and then let you ask questions. You don't need to necessarily ask questions about the presentation. I'm a CFO, so you should ask me any financial questions you may have. A lot of the stuff that's already been talked about, operating agreements, lines of credits, projections, stuff that I live with, and work with every day. So you should ask me anything you want. A few slides, basically a little bit about me and Pro CFO, a little about finance and what it kind of looks like and what it is, and then a little bit about cash flow. So part one, a little bit just to say hi to everybody, a little bit about me. Live up here in Illinois, so I think I'm pretty much far away from everybody. And it's freezing and horrible out and not fun. Moved here 3 years ago from New York. We were in New York for about 20 years, have 3 kids, 11, 9, and 3. Grew up in Massachusetts. Professionally speaking, spent a lot of time in New York in private equity, and also a lot of time, about half my career in private equity, and then about half my career operationally kind of running finance for small companies. Outside of, anyone with small kids or who has had or has small kids knows that you don't have a lot of free time. The little free time I have, these days I'm really into philosophy. If anyone is into pragmatism, William James, John Dewey, Charles Peirce, those are my guys. So fun stuff. On to Pro CFO Partners. I work for a place called Pro CFO Partners. We offer part-time CFO services to small and mid-sized businesses. We have around 35 CFOs working for us. I'm one of 4 managing directors, so most of my job is spent doing business development and sales, although I still have a couple of clients I work with. Our CFOs are kind of amazing, brilliant people. They mostly have been full-time CFOs for 15, 20 years. They've kind of lived through everything. They come from all industries. And a big part of my job is matching up the right CFO to the right job, and kind of, yeah, that's really it. So that's Pro CFO Partners in a nutshell. Why do we do what we do? I think to a person, like our reason for existence, that we believe that financial insight can empower business owners to help them achieve their goals. This is for small companies, this is for single shingles, this is for large companies. It is a belief that if you go a little bit beyond the bookkeeping and the cash flow, there is some real insight that can actually help you achieve your goals quicker and let you transform your company, whatever your goals may be, whether it's growth, profitability, all of the above, new territories, new products, all that stuff. That financial insight can kind of help you achieve those things. So I'll take a quick breath. That's me. That's where I work. What I'm going to jump into, and again, you should please feel free to interrupt. And at the end, again, my goal is to let this go about 10 minutes and then just open the floor up to questions. Oh, wow, Coach already has one.
I got a question for you, kind of. What you just said in this slide just is a big, we call it blinding flashes of the obvious, like a big aha moment for me, and somewhat saying that, if I'm reading you right, are you saying that the financial aspects of your business is the foundation, and you better be building off of that, building according to that as your foundation? Is that what you're suggesting?
Coach, it's almost like we've like rehearsed this, but yes, not only was that what I was suggesting, but it actually goes into my next slide perfectly. So I think and I'll just jump to the next slide. So the next slide talks a little bit about what is a finance function and what should it look like in your company. And that kind of goes to Coach's point, is like, you'll see the foundation. You'll see it's these 2 pyramids you put together. The one on the left shows the different functions within finance, because the big struggle for us as CFOs is that nobody really knows what a CFO does, right? You're going to do my taxes, I don't get it. Are you closing the books? So what does a CFO do? It's oftentimes one of the first questions we get. And this is kind of an attempt to talk to you about your own finance function. So even if you are a pizza restaurant doing $150,000 a year revenue, if you're a single shingle, whatever you are, construction in the trades, you have some element of all this. And at the very bottom is bookkeeping, and even under that is a layer of financial operations that every company does, no matter what. It's paying your bills, it's invoicing your customers, it's collecting payment, it's looking at your bank account. That is like financial operations, even below the bookkeeper. And I'm going to go through this, and hopefully it won't be too tedious, but I think it's important because it builds to where I think the power of having that financial insight comes to. So you start at the bottom layer. You're paying your bills, you're getting invoices, you're creating this kind of data. If you have a bookkeeper or you do your own bookkeeping, that means you close the books every month. So you do your bank reconciliation. outstanding checks, what kind of bank fees and things did I miss during the month that I now need to like book, like interest expense, things like that. If you are a little more sophisticated, you may have an accountant or may have a part-time accountant doing monthly journal entries. So if you're doing fixed fee work, or if you're doing construction that may span more than a month, you want someone closing the books monthly and saying, okay, actually, you only did 40% of this project. So even though they paid for the whole thing, you're not going to recognize all of that as revenue. And that's what your accountant will tell you every month, hopefully, give you a little more insight into kind of what's going on. Above that is a controller. A controller, all of a sudden, kind of, the net gets a little wider. They look into things like business insurance, compliance, things like operating agreement. I think someone mentioned operating agreement, lines of credit. Do you have the right kinds of credit? I mean, we see a lot of our clients have similar issues. They have bad credit, not bad credit like a bad credit score, but they have the wrong kinds of lending. They're paying way too much for the kind of lending they have. They have too much, or they have oftentimes too little. People are averse to debt. And oftentimes, you know, for many businesses, it should be part of your business model having debt. It's not all bad. It's neither good nor bad. It just is. But you should understand how it fits into your business and how much you need. Director of finance, when you start getting into that financial analysis part of it, like what is your profitability on your different products? What is your profitability on different projects? Are you costing them properly? If you do roofing, I notice there's a roofer here. Are you looking at your labor and putting that into your costs? Are you looking at transportation, and are you adding those things to your costs? And do you really know your profit? Because I find that many companies owners, you know, think they know their profit, but in actuality, they're a little bit off, and there's a lot of stuff that kind of gets lost. And they're trying to cost out their projects and their work. But it's important for you to understand that, because it guides, you know, who you market to and who your ideal customer is, and things like that. And ultimately, all these things ultimately trace back to what's in your bank account. At the end of the day is a big phrase accountants like to use, but whether the end of the day is a year or 10 years, all these things reflect in your bank account. So they're important to understand. VP of Finance and CFO kind of elevate that. Let's not only look at your margin per customer or margin per product or margin per service, but let's start looking forward. Like, how can we improve that? How can we change that? Should we change your customer mix? Should we change what you do and what you outsource? Should we change the kind of lending you have? Should we change your pricing? Should we revisit your pricing? Oftentimes those are things that don't get revisited enough. Does your insurance make sense? Especially if you're a trade, you could be paying a lot for workers' comp, things like that. Let's look at those things a little more critically, because we find that a lot of business owners don't always know how to interface kind of for lack of a better word, at a high level with, like, you know, business brokers, insurance brokers, health insurance brokers, payroll companies. You want to make sure you're getting the most out of these services. And a lot of business owners just don't necessarily know how to do that, because that's not their background. It's not their strong suit. So that's finance in a nutshell. I'll take a breath and let Coach ask another question.
Inflationary trending protection kind of view, how obviously it's around us now. As a CFO, and you know, and with your experience, what are we looking for right now? How do we control that? Any thoughts?
Yeah, I mean, we control it by understanding it, by looking at, you know, like I mentioned that we had this industrial supplier that basically, I mean, I'm sure probably most people here know what that is. It's basically a hardware store for the trade. So it's where construction manufacturers go, plumbers go, electricians go to buy their parts. They can't wait a day for their parts. They need them that day. But inflationary pressure is huge in that, because, you know, they bought from distributors that change their prices every single day, right? And this is a small company that can't change their own prices every day because they just don't have the back office to support it. So it's understanding how material is this supply chain and inflationary pressure. Is it affecting your labor costs? Is it affecting your health insurance costs? And what is the cost of doing something about it? In this case, the cost of not doing something about it for this industrial supplier was really high, because they were charging prices from a year and a half ago that were completely out of line with what they were paying, right? So in that case, I was like, listen, here's the cost of not doing anything. It's huge. You're losing money on a lot of stuff. People come in and you're wondering why they're buying 18 of things. It's because you're charging like half of what every other place is charging, right? They know that. And so even though it's going to cost you X amount to fix it, you have to do that. So that kind of empowering analysis lets you make a decision, because oftentimes if the inflationary pressure is minimal, you may not want to do anything about it. You know, for small companies, doing something about it costs money, right? There's a back office implication, and there's a risk. Anytime you change, your customers notice it, you notice it. There's always implications that are kind of unknown. So that's my answer to that question. Any other?
Track it.
Any other questions or thoughts before I move on? I'm trying to stick to time, and Coach, please kick me under the table or something if I'm going too long, because I tend to go too long. That's my kryptonite. So what does this all mean? This is what we call our financial flywheel. It is kind of our thesis and the core of our belief structure is that all these things are intertwined. So when you get an invoice in the door and you have to pay it, how you code it and how you look at it actually impacts all, even the bigger things like your goals and strategies. Someone mentioned they already met their projection. And how do you project? I mean, how do you create the projection? I mean, is it just revenue, or is it for every line item? Is it for expenses? Are you coding expenses properly? So our thesis is, as a CFO, you can't just do one thing. You can't just say, hey, come in and come up with a new projection for me. We have to really touch all parts of it, including your systems and processes. Like, how are you processing invoices? How are you invoicing customers? Collections is almost always a big topic for almost all of our clients. Are you doing it properly? There is a best practice for this. A lot of business owners just don't know what it is, right? And we're happy to talk about it. I'm happy to talk about it today if that's something of interest, but I won't now because maybe it'll just bore everybody. But there are best practices for a lot of things that help advise, and help you adjust your revenue model. How do you charge? How much do you charge? How do you do pricing? Things like that. It should really be, these things are all intertwined. You can't just take one piece of it out and say, hey, I'm going to create a projection for next year, even though like my books aren't kept properly. And by the way, that's not a judgment thing. If books don't need to be kept properly. I'm not crazy about that. We always are a proponent of do what's right in proportion to the size of your company. So we don't need to build a huge finance function if you're 6 people who are mostly out there working all day doing actual work. But let's build what's right for you and to maximize the benefit of having some degree of finance function, knowing that it's always going to be 1 or 2 people wearing multiple hats, right? That's just the nature of the game. So anyway, that's our flywheel. And that kind of, I'm going to jump into cash flow next, just because I think that's top of mind. But does anyone have any questions on, I don't know, finance or financial functions or anything?
I just put in the chat, I would love to any kind of best practices you have, if you could send that out, or even a document or anything like that afterwards. I mean, I'd love to do that.
Whew, okay, that's a big topic. But for all of, I just jumped to the next one by accident. Sorry. Yeah, let me have a think, and also, by the way, I'm happy to have one-on-ones with anyone after the fact. It's just to I love this stuff. The reason why I'm doing it is because first and foremost, I love it. I don't think I'm really good at selling, but I couldn't sell steak knives. I can sell this because I believe in it and I love it. And I'm happy to hash out stuff with anyone on this call, just as a courtesy to Coach Hess and this group to kind of do it in a non-salesy. Let's just dig into it. Let's solve some problems, because accounting is obviously a huge area, but that's just me rambling and giving you a long answer. Yes, I'll look for something I can send you for that. Happy to do it. Let me just jump quickly into one little kind of practice area that might be helpful, because I know cash is, I've had clients where I talk to them about accrual accounting and they're like, dude, be quiet. And they don't use those kind of nice words. They're like, I don't care about that. I want to look what's in my bank account every morning, and all your stuff, you do that on the side, but I don't need to hear about it. So cash flow is top of mind, as it should be, because at the end of the day, like I said, all this fancy stuff and modeling and revenue models drills into this, right? It's really very simple. How much is coming in and how much is going out? And how much do I start with? Cash flow models are almost always done on a weekly basis. They're almost always done for 13 weeks, which is the same as 1 quarter. So 1 quarter of the year is 13 weeks. That's how we like to do it. They're very granular exercises. There's no shortcuts. There's no hacks for doing a cash flow projection properly. The only way to do it is really gritty, really granular. This is a high level, really simple version. I'm happy to share this slide with everyone, or share all these slides, maybe except for the first one. You don't need to see a picture of me and my family, but with everybody. But it's super granular. And it's literally, it's as simple as, how much cash do I have in the bank today? How much do I owe? What's my accounts payable? How much is owed to me? What's my accounts receivable? And then what do I project going forward? There are recurring expenses, electric, rent, payroll. Oftentimes it's recurring, assuming it's not too much hourly with too much fluctuation. And then it's a lot of assumptions. Well, I think we're going to spend this on this. And what you find is that the first iteration of your cash flow model, after maybe a week or two, is a complete disaster. It's wrong in all over the place. But over time, you iron out. It really gives you a lot of insight into your company. It's a great exercise to go through. It's mildly painful. It's difficult. And there's no shortcuts. You really have to go line item by line item, but it gives you a lot of insight into what's going on. And what we find as CFOs, that a lot of owners are a little surprised by a lot of these line items. Wow, I didn't know I was spending that much on this. Or, oh, I forgot I didn't cancel that subscription to this, service I signed up for a year ago for a free membership, but I still have it. It can provide a lot of insight. So it's something we really encourage companies to do. We facilitate it and do it ourselves.
Uh-oh. It got real cold in Chicago all of a sudden there, Brian. You all right?
Yeah, I'm good.
Okay. You froze. Nice. I know sometimes the temperature drops like really rapidly in that area.
Did I freeze on the screen?
Yeah. Yeah, you did for a sec.
Uh-oh, am I frozen right now?
Oh, you're good. You're good. You're back.
Oh, I'm good. Okay, good. All right, one more slide, then I'm done. Then we'll have questions. I lost track of time.
Can I ask you? I want to ask you something about this cash flow, okay? Because we work pretty close from the P&L, as you know, and how I drive forward with the pro forma thinking and so on. How does the cash flow report kind of differ from the P&L report?
Coach, I love your questions. Okay, so here's the fundamental way it differs. It's revenue recognition and expense recognition. So every month, if you have some kind of monthly close process, you will say, hey, this customer paid for a roofing job that's going to take me 2 months, but they paid for it all up front. Your cash flow is going to look really happy because, hey, you just made $50,000 in 1 month, but your accounting, your P&L will look a little less happy because they'll say, actually, let's divide that by 2 and spread it out over 2 months. And it is the belief of anyone who believes in accrual accounting, including myself, that the more accurate picture is the latter of those. It's the one that says, hey, it's a little less happy, even though you made that whatever it was, $50,000, all came in 1 month. In actuality, you only earned $25,000 of that. And if there's an issue, if there's a delay, if they decide your service just is horrible and they want to cancel, that other 25 may not really be yours yet, right? It will be at the end of next month, assuming you finish the job, but it's not yet. And to us, that's a more accurate way to look at your business. And same with like business insurance. Oftentimes it's paid once a year or even twice a year, but in reality, you shouldn't look at that as like a bad month because you paid your entire liability insurance in January or something. You should spread it out, and that's what accountants do. That's the biggest difference: recognition of expenses and revenue. One of the first things we always do, one of our kind of quick wins we look for with clients is like improving cash flow, right? The 2 examples I mentioned way earlier, which I'm sure everyone's forgotten, did just that, which is raise prices in one case, in another case, change out their PEO and save a lot of money. And in general, like, as CFOs, we have a ton of tools. I don't expect you to read all of these, but here are there are a million and one ways to improve your cash flow, right? Not all of them are obvious, and I'd recommend you get some advice before you do it, but we almost find that almost all of our customers are capitalized improperly. What that means is they either haven't put enough money into their company, they haven't borrowed enough money, they borrowed too much money, things like that. You should have the right amount of debt, you should have the right amount of funded capital to support your business model and your growth, right? That's a big one. Oftentimes pricing is it's a hassle to do, it's a hassle to message to your customers, there's a risk that customers will get upset. But it's something that's really important. If you do it in a methodical, fair way and give people notice, it almost always is acceptable, especially in this environment where prices are just all over the place and going up all the time. Always helps to revisit your vendor contracts, all your distributors. Look at your activity. I mean, if you had a distributor that you were spending $10,000 a month with a year ago, but now you're spending $40,000 a month with, you should revisit your terms with that distributor and your pricing. You should probably maybe be in a different tier of pricing or something. Anyway, there are a million and one ways to do it. Here are 20 of them. And a big part of our job as CFOs is going on site and saying, okay, which ones of these make sense and which don't, and which are going to give you the most bang for the buck today. So,
excellent.
Okay, I'll take a breath. I don't know if that just went for 2 hours or 20 minutes. I totally lost track of time, but I would like to open the floor for questions about this, about anything. You have a CFO at your disposal. Just ask me anything you want. I'll try my best to answer, and always happy to take it offline at some point in the future if you want to. Any questions? Anything?
Are relief funds grants? What exactly are those?
Oh, relief funds. Yeah, you should. So there are different types. And that's all of our CFOs are spending a huge part of their lives doing that now. There's the tax credit, the ERC, which is not a grant, but it is a tax credit. which is huge, right? So, and they changed the rules for that back in December. So many more companies are eligible than were pre-December of last year. So I would encourage everyone to get updated today on that. And again, I'm happy to talk about it like after the fact offline. Like, let's go into your company and are you eligible or not? There's also the PPP. There were 2 tranches of that. Both were forgivable. Most companies got forgiven. So it wasn't really a grant, but it kind of ended up being a grant. Then there's the EIDL, which is a loan, but a very generous loan in terms of terms. I think 2 years with no pay down. And then after you start paying it off, it's like a 2 or 3% interest rate. And then there are a lot of local stuff. So we have clients all over the country in different states, different cities. There are a lot of local state and city kind of grants, tend to be smaller, but depending on where you're located geographically and what your industry is, especially if you're a not-for-profit, there is stuff available, disaster relief funds, things like that. So that's something we always jump into because most of our clients were hurt by it, right? Some weren't, some were just the opposite, and some were just flat, but many were hurt by it. And candidly, even the ones that weren't always wanted to like maximize what they could get out of this, you know, and as long as it's within the rules, we're happy to kind of, that's a big part of our job, helping, really just doing the applications for that. And I mean, listen, our role as CFOs is to really like, when we have clients, we have access to their bank accounts, we've signed the NDAs and all that, but like we're their CFO, we have internal email addresses. We often not just do this stuff for them because it's our first language, you know, finance and numbers, and, you know, may not be exciting to most people, but for us, oddly enough, it kind of is. So this stuff, and again, I'm happy to have a one-on-one after and talk more about it. Cool. Anything else?
Man,
no other finance or cash questions. All right,
awesome. That works. Stuff, Brian. Awesome. Cool. That, very valuable. Yeah, thank you very much for that. You know, we've hit a good hour now, and I think it's a good time to take a quick break. But when I say quick break, I think 5 minutes is kind of what we like to do because we got a lot to cover, and we want to keep moving. We'll come back and we'll hear from Carl in 5 minutes right now at 2:10. Everybody good with that? All right, we'll see you back here in a few.
Thanks, everybody.
Good work, Brian. Congratulations.
Thanks, Coach.
That was awesome.
Thank you.